Question 1. From a practical standpoint, Mr. Ellison owns a mid-sized manufacturing facility in Peoria, Illinois. A fire causes extensive damage to his production line, leading to a complete shutdown of operations. His commercial property policy includes business income and extra expense coverage. While the property damage is being repaired, Mr. Ellison rents temporary machinery and relocates operations to an alternate site. However, a dispute arises when insurer denies part of the claim, stating the relocation expenses are not covered. Mr. Ellison believes otherwise. What is the most accurate analysis of this situation? A. The insurer is correct. A business income coverage only reimburses lost profits, not relocation expenses. B. Relocation expenses are covered only if the insurer proves they exceed the loss of income. C. The relocation expenses are covered under extra expense coverage provided they reduce the overall loss. D. Temporary operations at another location are never insurable under business income or extra expense policies. Answer. Correct answer. C. Explanation. Under the ISO Business Income and Extra Expense Coverage Form CP030, extra expense coverage pays for necessary expenses the insured incurs to avoid or minimize the suspension of business and to continue operations. This includes renting equipment and operating at a temporary location if it reduces the total amount of loss. The insurer's denial may be incorrect if the expenses were reasonable, and at reducing the loss, this coverage is designed to maintain business continuity. Options A, B, and D misrepresent or oversimplify policy terms. Question 2. In light of recent developments, insurance regulators emphasize the importance of understanding the difference between perils and hazards in assessing risk and underwriting decisions. Which of the following best distinguishes between a peril and a hazard? A. A peril is a condition that increases the probability of a loss. A hazard is the actual cause of loss. B. The hazard is the event that causes a loss. A peril is the underlying contractual exclusion. C. A peril is the cause of loss, while a hazard is a condition that increases the likelihood or severity of that loss. D. Perils and hazards are synonymous terms used interchangeably in commercial insurance contracts. Answer. Correct answer. C. Explanation. A peril refers to the actual cause of a loss. For instance, fire, theft, or windstorm. Hazard is any condition that increases the chance or severity of the peril, such as poor wiring, physical hazard, or moral hazard, dishonesty. This distinction is foundational in commercial insurance underwriting. The NAIC Property and Casualty Exam Outline and EU materials stress this conceptual separation. Options A, B, and D show confusion between cause and contributing conditions. Question 3. Taking into account the concept of indemnity, is Navarro files a claim under her commercial property policy after a neighboring tenant's negligence causes fire in her insured retail space. Her insurer pays her claim in full. Later, Navarro is contacted by the negligent tenant's insurer offering direct settlement. What should she do next? A. Accept the offer since she is entitled to recover from all sources. B. Refuse the offer as she has already been indemnified by her insurer and cannot profit from the loss. C. Accept the offer but inform her insurer afterward. D. Refer the other insurer directly to her own insurer because subrogation rights now belong to them. Answer. Correct answer. D. Explanation. When an insurer pays a loss, it obtains subrogation rights under the policy. The right to recover from the negligent third party. The insured is prohibited from recovering again from the responsible party to prevent double recovery. Subrogation prevents unjust enrichment and supports indemnity. According to standard ISO policy conditions in Illinois contract law, Navarro must direct any such communication to her insurer. Accepting another payment or C would breach policy terms. Question 4. By evaluating risk, ABC Insurance Company decides to decline commercial liability coverage for Mr. Ahmed's printing business based on third-party credit report that indicated delinquent accounts. However, Mr. Ahmed was not informed about the credit check beforehand. What if CRI provision was likely violated? A. Insurers may only access consumer reports if the applicant explicitly waives if CRI rights. B. Insurers must obtain written consent and notify applicants when adverse action is based on credit information. C. There are no restrictions under FCRI when underwriting commercial policies. D. FCRI only applies to personal lines insurance policies, not commercial ones. Answer. Correct answer. B. Explanation. The Fair Credit Reporting Act 15 U.S.C. SSS 1681 mandates that insurers must provide pre-adverse action notice if credit information is used to make underwriting decisions. Although commercial lines applicants are not always subject to the same strict standards as personal lines, Illinois has adopted additional consumer protections that mirror federal requirements in many commercial contexts. Failure to notify applicants of the use of credit before taking adverse action violates a FRI. Option A is too narrow, while C and D. Misrepresent legal scope. Question 5. As illustrated by a professional cleaning company insured under the Deal policy files a lawsuit for bodily injury she suffered in December 2022. The incident occurred in January 2022. The business switched from an occurrence form to a claims made form in July 2022. The prior policy expired without retroactive coverage. Which form would likely respond? A. The claims made form because the lawsuit was filed after it became effective. B. The occurrence form because the incident occurred during its policy period. C. Neither form because no tail coverage was purchased. D. Both forms since the injury spans across the two policies. Answer. Correct answer. B. Explanation. Occurrence policies cover claims arising from incidents during the policy period, regardless of when the claim is made. Claims made policies, on the other hand, cover only those claims made during the policy period and arising from incidents after the retroactive date. Since the injury occurred before the claims made policy started, a no-tail, extended reporting period or retroactive coverage exists, only occurrence policy would respond. This aligns with standard ISO forms in Illinois administrative rulings. Question 6. Examining the consequences of using different causes of loss forms in a commercial property policy. Which of the following perils is only covered under the special form but not under the basic or broad forms? A. Fire. B. Falling objects. C. Theft. D. Weight of snow, ice or sleet. Answer. Correct answer. C. Explanation. The special form CP 1030 is an open perils form, meaning it covers all risks of direct physical loss unless specifically excluded. Theft is notably excluded from basic and broad forms, but included in the special form unless specifically excluded. Basic covers fire, lightning, explosion, abroad ants, falling objects, and weight of snow. Theft is a key differentiator and essential for businesses with value. Inventory. This understanding is essential for policy customization under the ISO Commercial Property Program. Question 7. Throughout the course of underwriting a restaurant's application for Commercial Package Policy (CPP), the underwriter notes multiple prior claims, poor maintenance history, and an upcoming expansion to include bar. What is the most prudent underwriting action? A. Approve the policy without restrictions. B. Decline the risk due to excessive exposure. C. Request risk control reports and consider exclusions or rating surcharges. D. Approve the policy and exclude all liability coverages. Answer. Correct answer. C. Explanation. Underwriters are tasked with evaluating risk and determining appropriate policy terms. They may apply rating surcharges, require loss control inspections, or impose endorsements or exclusions as risk mitigation tools. Illinois insurers must adhere to reasonable underwriting standards under state regulations. Automatically declining or issuing blanket exclusions without evaluation, as in B or D, may breach market conduct rules. The prudent step is to gather more information and negotiate terms accordingly. Question 8. Considering the evidence, a warehouse manager in Joliet discovers a recurring pattern of inventory theft traced back to a long-time employee. The company carries commercial crime insurance with an employee dishonesty insuring agreement. What must the insured demonstrate to trigger coverage? A. That law enforcement has arrested the employee. B. That the loss occurred due to fraudulent or dishonest acts by an employee. C. That inventory was stolen from locked premises. D. That multiple employees were involved. Answer. Correct answer. B. Explanation. The ISO Commercial Crime Policy CR 026 provides coverage under the Employee Dishonesty Insuring Agreement for loss resulting from fraudulent or dishonest acts by employees, regardless of whether they are prosecuted. Law enforcement involvement is not required. The insured must show the loss resulted directly from an employee's dishonest act with intent to cause loss and gain. Options A. C and D at unnecessary or incorrect conditions. Question 9. The most significant aspect of a coinsurance clause in commercial property insurance is its function in promoting accurate coverage valuation. If a building is insured for only $500,000 with an 80% coinsurance clause, but its replacement cost is $1 million, what happens in the event of a $200,000 partial loss? A. The full $200,000 is paid. B. The insurer pays $160,000. The insured is penalized for underinsurance. C. The claim is denied due to violation of coinsurance. D. The insurer pays only actual cash value. Answer. Correct answer, B. Explanation. Coinsurance requires the insured to carry a certain percentage of the property's value. In this case, required insurance equals 80%, so $1 million equals $800,000. Text. Required insurance equals 80% times $1 million equals $800,000. Required insurance equals 80%, so $1 million equals $800,000. Insurance carried. $500,000. Text. Insurance carried equals $500,000. Insurance carried equals $500,000. Payment equals 500,800,000. EC equals $125,000. Text. Payment equals left. Frac 500,000 800,000 right times 200,000 equals $125,000. Payment equals 800,500,000 equals $125,000. So the insured absorbs $75,000 penalty. But if the policy has waiver for small claims, the loss could be paid in full. However, under standard ISO terms, underinsurance invokes coinsurance penalties. Option B best represents this rule. Illinois insurance law enforces coinsurance provisions when clearly stated in policy. Question 10. When presented with complex coverage needs, size manufacturing adds a flood coverage endorsement to its commercial property policy after a prior flood loss went uncovered. Which of the following best describes the legal function of an endorsement? A. It creates a new separate policy with its own exclusions and declarations. B. It modifies, deletes, or adds to the terms of the existing policy. C. It replaces the underlying contract entirely. D. It automatically applies to all future policies. Answer. Correct answer, B. Explanation. An endorsement is a legal modification to an insurance policy used to change coverage terms, add exclusions, or provide additional coverage. Endorsements become part of the policy contract and are governed by standard contract law. ISO and Illinois insurance forms require all changes to be in writing and endorsed by the insurer. Option A confuses endorsements with standalone policies. C and D mistake their legal application. Question 11. In contrast to physical injuries, a dispute arises when Is Rankin, a local bakery owner, is sued for allegedly copying a competitor's slogan in her marketing. Her commercial general liability (CGL) policy includes coverage A, B, and C. She files a claim expecting defense and damages to be covered. With CGL coverage is most applicable in this scenario. A. Coverage C. Medical payments. B. Coverage bodily injury and property damage. C. Coverage B. Personal and advertising injury. D. None, because intellectual property is excluded under EG. Answer. Correct answer, C. Explanation. Coverage B under the standard is CGL form. CG01 covers personal and advertising injury, which includes offenses like copyright infringement in advertising. This does not apply to patents or trade secrets, but can apply to slogans. Coverage applies only to physical bodily injury or property damage, and coverage C covers only medical expenses for bodily injuries. Intellectual property may be excluded under certain conditions, but advertising injury may still trigger coverage. Question 12. From a historical standpoint, valid insurance contracts must meet certain legal criteria. Which of the following is not a required element of an enforceable insurance contract under Illinois commercial insurance law? A. Legal purpose. B. Mutual agreement. C. Statutory consent. D. Consideration. Answer. Correct answer, C. Explanation. Valid contracts must meet 4 requirements. Legal purpose, competent parties, mutual agreement and consideration, something of value exchanged. Statutory consent is not required contract element but refers to regulatory approval for insurers to operate. Illinois follows traditional common law contract principles as outlined in legal texts in the Illinois Insurance Code. All other options are required components of valid insurance agreement. Question 13. To illustrate this point, grant applies for commercial property coverage and answers. No to question asking if there's any ongoing renovation. Later, fire damages the property and the insurer discovers the building was under full interior remodeling. What principle governs the insurer's ability to deny the claim? A. Warranty violation. B. Concealment of material fact. C. Misrepresentation with waiver. D. Estoppel due to silence. Answer. Correct answer. B. Explanation. A concealment is the intentional failure to disclose a material fact. Under Illinois law and NAIT model regulations, concealment of a fact that would impact the underwriting decision gives the insurer grounds to void the contract or deny a claim. A warranty must be expressly written, and estoppel applies only when the insurer's behavior leads the insured to rely on a misinterpretation. The application misstatement makes this a concealment case. Question 14. With the advent of more complex liability scenarios, Mr. Delgado's business has a dealer policy with $1 million per occurrence and $2 million aggregate limits. If three separate covered claims are filed in one policy year, $1 million, $800,000, and $500,000, what is the total amount the insurer is obligated to pay? A. $2.3 million. B. $1.8 million. C. $2 million. D. $1 million. Answer. Correct answer. C. Explanation. The aggregate limit is the maximum an insurer will pay for all claims in a policy year, regardless of the number of claims. The per occurrence limit caps how much will be paid per claim here. Claim 1 equals $1 million, claim 2 equals $800,000, claim 3 equals only $200,000 payable. Since aggregate limit is $2 million total payout equals $1 million as outlined in the USCGL form CG01 and supported by Illinois Department of Insurance guidance. Question 15. Examining the consequences of selecting higher deductibles, ABC Builders chooses a $50,000 property deductible to reduce their premium when a $70,000 covered loss occurs. How much does the insurer pay? A. $20,000, B. $50,000, C. $70,000, D. Nothing. Answer. Correct answer. A. Explanation. A deductible is the amount the insured must pay before the insurer pays the remainder of the loss. With a $70,000 loss and $50,000 deductible, the insurer pays $20,000. This reflects the ISO Commercial Property Conditions Form CP090, which clearly states deductibles apply per occurrence unless otherwise endorsed. Option C ignores the deductible. D would be correct only if the loss were less than or equal to the deductible. Question 16. When faced with a liability claim, is trans delivery truck hits pedestrian while making delivery. She carries business auto policy BAP with symbol 1, any auto and liability limits of $500,000. The injured party seeks $800,000 in damages. Which amount best represents is a trans insurer's obligation? A. $800,000 since it was covered auto. B. $500,000 with Isitran personally responsible for the rest. C. $300,000 assuming depreciation. D. Nothing unless the pedestrian was at fault. Answer. Correct answer. B. Explanation. Symbol 1 provides the broadest coverage for any auto used in business, but the insurer's obligation is capped by the liability limit, $500,000. Any excess liability is the insured's personal responsibility. The ISO Business Auto Coverage Form 01 and Illinois insurance regulations clarify that policy limits are the maximum payable per accident regardless of actual damages. Question 17. The underlying principle of the Terrorism Risk Insurance Act (TRIA) is to stabilize insurance markets following catastrophic events. Under current TRIA provisions, what must occur for an act to be certified as terrorism? A. Any event causing more than $1 million in losses qualifies automatically. B. Only acts occurring outside U.S. borders can be certified. C. The U.S. Secretary of the Treasury must certify the act in concurrence with the Secretary of State and Attorney General. D. Only insurers can petition for an act to be certified. Answer. Correct answer. C. Explanation. Under TRIA, Public Law 107297, for an event to be certified as terrorism, it must be formally declared by the Secretary of the Treasury in concurrence with the Secretary of State and the Attorney General. The law sets minimum loss threshold $5 million and must be violent act intended to coerce or intimidate civilians or influence government policy. Options A, B, and D misstate the statute's criteria. Question 18. Given the circumstances, a dry cleaning business has a Bailey's customer policy. Fire causes damage to 50 customer garments stored on premises. The insured seeks coverage. Which of the following is true regarding this situation? A. Coverage applies only if the insured is legally liable for loss. B. The policy only covers damage from burglary or theft. C. The policy pays regardless of the insured's liability. D. The customers must claim under their homeowners' policies. Answer. Correct answer. C. Explanation. Bailey's customer policies cover customer property in the insured's care, custody, or control, regardless of whether the Bailey is legally liable. The policy compensates customers directly or via the insured, depending on the claim structure. It fills gap because many customers' homeowners' policies exclude off-premises business damage. ISO Inland Marine Forms and Illinois policy guidelines confirm that fault is irrelevant in Bailey's policy coverage. Question 19. The traditional approach to commercial policy organization includes several key sections. In a standard ISO commercial policy, which section specifies the limits of insurance and policy period? A. Exclusions. B. Declarations. C. Conditions. D. Endorsements. Answer. Correct answer. B. Explanation. The declarations page outlines critical policy details, named insured, policy period, coverage limits, and premium. It's the face of the policy and varies per insured. Exclusions outline what is not covered. The conditions outline duties and responsibilities. The endorsements modify terms. The NAIP model outlines these 5 major policy components, and Illinois mandates clarity on declarations to avoid unclaims practices. Question 20. Across different scenarios, one recurring insurance principle is that claim payments should restore the insured to their pre-loss condition. Why is this principle foundational in commercial lines? A. It allows the insured to recover a profit from a loss. B. It aligns with the principle of utmost good faith. C. It prevents overinsurance, a moral hazard, by ensuring no financial gain. D. It ensures insurers compete fairly in the marketplace. Answer. Correct answer. C. Explanation. Indemnity means restoring the insured to their original financial position without gaining from the loss. This avoids moral hazard, where the insured might intentionally cause or fail to prevent a loss. Overinsurance encourages fraud, which is why indemnity is central to all ISO commercial policies and echoed in Illinois Administrative Code Title 50. Option A contradicts indemnity. Option B confuses it with uberrimi fide, utmost good faith. Question 21. When evaluating the merits of coverage choices, JL Manufacturing operates in Illinois with 40 full-time employees and contracts have additional seasonal labor. During peak season, the temporary worker suffers a machinery-related injury. JL's insurer argues that the injury is not compensable under their workers' compensation policy. What is the most relevant consideration in determining coverage under Part 1, Workers' Compensation Insurance? Whether the worker was properly trained by JL. B. Whether the injury occurred off the premises. C. Whether the worker is considered an employee under Illinois law. D. Whether the employer submitted the first report of injury within 24 hours. Answer. Correct answer. C. Explanation. Part 1 of the Stadtlease policy provides statutory benefits for employees injured in the course of employment. Under Illinois Workers' Compensation Act 820 Ilks 305, the key factor is employee status, regardless of whether the worker is labeled temporary or not. If the worker is under direction control of the employer, coverage typically applies. Training, location, or delay in reporting doesn't void the obligation under Part 1. Question 22. In a modern context of construction projects, Zeiss Contractors purchases a builder's risk policy to cover a warehouse under construction. Midway through, vandals damage the structure and tools. The insurer agrees to pay for the structure but denies tool damage. Why is this denial likely valid? A. Tools are only covered if explicitly endorsed. B. Builder's risk policies never cover theft or vandalism. C. Vandals must be prosecuted before coverage applies. D. Structure damage must occur within 30 days of project start. Answer. Correct answer, A. Explanation. The ISO Builder's Risk Coverage Form CP020 covers buildings under construction, materials on site, and temporary structures. Contractor tools and personal property are excluded unless added by endorsement, e.g., contractor's equipment or installation floater. Coverage also ends when construction is complete or property is occupied. Illinois carriers follow ISO form structure. Options B, C, and D are inaccurate or irrelevant. Question 23. Among the various crime coverages available, forgery or alteration coverage is often overlooked. A finance employee at Great West Tech fakes the company president's signature on multiple business checks. The checks clear and funds are lost. Which policy should respond? A. General liability policy. B. Employee dishonesty bond. C. Forgery or alteration insuring agreement in commercial crime policy. D. Professional liability policy. Answer. Correct answer, C. Explanation. The forgery or alteration insuring agreement in ISO commercial crime coverage CR021 pays for losses from forged or altered checks, drafts, or similar instruments, regardless of who caused the loss. While employee dishonesty coverage may also apply, forgery coverage specifically targets instrument fraud. GL and professional liability are not applicable. Illinois insurers follow standard ISO forms unless amended by endorsement. Question 24. Historically speaking, an insurable interest must exist at a specific point to validate a property insurance contract. When must insurable interest exist for a commercial property claim to be valid in Illinois? A. At the time the insurance policy is issued. B. At the time of loss. C. At the time of premium payment. D. Both at inception and at time of loss. Answer. Correct answer, B. Explanation. Illinois law and standard insurance doctrine require that insurable interest exists at the time of loss, not necessarily at inception. Without this, the insured suffers no actual loss and cannot claim under the principle of indemnity. This is reinforced by case law and ISO commercial property policy language. Option D is incorrect because interest at inception alone is insufficient. Question 25. To determine whether a policy meets risk-specific needs, an agent reviews a client's CPP. It includes commercial property CGL and crime coverage. However, the insurer rejects it due to missing a required component. What is always required in a commercial package policy under ISO rules? A. At least 3 lines of insurance. B. At least 2 qualifying coverage parts plus common declarations and conditions. C. Only liability coverage. D. Crime coverage must always be included. Answer. Correct answer, B. Explanation. The ISO commercial package policy requires at least 2 eligible coverage parts plus common declarations and common conditions to be valid. As if only 1 coverage part is present, it's issued as a monoline policy. Crime is optional and 3 lines are not mandatory. This is outlined in ISO Manual and Illinois Regulation Part 919. Question 26. Under the assumption that an Illinois insurer wishes to cancel a commercial lines policy midterm for non-payment of premium, which of the following is true regarding notice requirements? A. 60 days notice is always required. B. No notice is required if payment is late. C. 10-day written notice must be provided to the insured. D. Only verbal notice is required. Answer. Correct answer, C. Explanation. Under 215 Ilks 5143.14, an insurer must provide at least 10 days written notice for cancellation due to non-payment. This rule applies to most commercial lines policies. For other reasons, 30 days notice applies. Insurers must also retain proof of mailing. Option A exaggerates requirements, and B and D violate Illinois administrative rules. Question 27. To illustrate this point, Hearst Enterprises has A property policy excluding flood. They add a flood coverage endorsement. A water main breaks, flooding the basement. The insurer denies the claim, citing the water source. What is the critical distinction that determines coverage? A. Flood endorsements cover all water-related damage. B. The origin of water determines coverage under flood endorsements. C. Coverage applies only if floodwaters rise above 2 feet. D. The endorsement overrides the policy exclusions entirely. Answer. Correct answer. B. Explanation. ISO flood coverage endorsements typically define flood as overflow of inland or tidal waters, rapid accumulation from natural sources, or mudslides. Water main breaks are often excluded unless specifically included under an endorsement. Coverage depends on the source and whether it meets the endorsement's definition of flood. This distinction is upheld in policy language and relevant Illinois rulings. Question 20. In light of recent developments, Delta Title Company stores hundreds of original property deeds. A fire destroys its filing cabinets. Which endorsement under a commercial property policy would best respond? A. Bailey's customer coverage. B. Business income coverage. C. Valuable papers and records coverage. D. Electronic data processing coverage. Answer. Correct answer. C. Explanation. Valuable papers and records coverage reimburses the cost to reproduce or restore documents lost due to a covered peril like fire. It applies to physical documents, not just electronic data. ED is for hardware, software, and Bailey's applies to property of others. This form is typically added via CP010 endorsement in ISO policies and is widely used in legal and financial sectors. Question 29. The core principles of coinsurance require the insured to carry a minimum percentage of property value. The business insured for $600,000 has an 80% coinsurance clause, but the property is valued at $1 million. A $400,000 loss occurs. What is the insurer's obligation? A. $400,000. B. $480,000. C. $300,000. D. $250,000. Answer. Correct answer. C. Explanation. Coinsurance formula. Amount carried, amount required. X loss equals recovery text. Amount carried, amount required. Times text loss equals text recovery. Amount carried, amount required. X loss equals recovery. 600,000, 800,000. X equals 300,000. 600,000, 800,000. Times 400,000 equals 300,000. 600,000, 800,000. X equals 300,000. Insured absorbs $100,000 penalty. This calculation is outlined in ISO Commercial Property Conditions CP090 and used uniformly in Illinois. Options A and B assume full or excess payment, which violates coinsurance provisions. Question 30. To what degree does a business auto policy cover physical damage to an owned vehicle used in a business fleet? Assume is Rivera has selected both collision and other than collision. Otro. Her truck is damaged by falling ice. Which coverage applies? A. Collision. B. Other than collision. Comprehensive. C. Only liability. D. None, since ice is an excluded peril. Answer. Correct answer. B. Explanation. ISO BAP 01 defines other than collision (otro) to include damage from falling objects, fire, theft, vandalism, or natural events. Falling ice is a covered peril under (otro), not collision. Collision covers impacts with another vehicular object. Illinois insurers must follow policy definitions unless altered by endorsement.